Well, welcome back, everyone. It was a super exciting Federal Reserve Open Market Committee day today and an amazing morning of learning in a very special session I did. So, to start off, season's greetings and thank you to everyone that joined our educational session earlier, and welcome to all the new student family that's joined us today. We utilized the tools that were taught this morning live in market today. You're looking at a slide that has my futures dome on it and a multi-time frame view of the SPY. I traded the ES specifically, but we talked through the SPY today, so I wanted to bring that continuity in. And again, all trading is at the independent trader's risk. Can't guarantee that results like these will happen again. Past performance is not indicative of track record or future performance either. So make sure you consult with your your financial advisor before making any trading decisions. Trading can involve loss. Now, in this case today, you can see that I grossed just over $500, about 537 bucks and change there, using strategies that were literally taught earlier this morning. Now, the FOMC, and I'll take you to the live page right now so you can see the dome is ticking away right now. And let's see if I can bring the dome on the screen there. There we go. So what you should be able to see in just a moment over here is the same chart from this morning there and what you just saw on the slide. What you've got effectively is a market that is telling you right now it is extended, but it has not elected to stop the rise. Now, we discussed earlier this morning and throughout the week the TRP toolkit and the power in the simplicity of the signal. We today got a little deeper on things like runaway breakouts, which you can see on the 1 hour chart, well above that target 2, the magenta line. And we established a zone that we are likely going to come up to in today's market. And then if we go higher, where is that next stop on the bus? So we identified the midline target on the 4 hour chart as an area, which we did get slightly above and have closed above there. 470 bucks and 44 pennies is the close for the SPY on the day. And the signals on the 4 hour, daily, and the weekly chart, which is hidden by my dome, are still quite positive. Let me take my dome off the screen there so you can see that as well. And there you are. Now, are we headed directly up to the 480 area, or is the market going to succumb to gravity after Santa came and gave us presents early, I think, for this market month? And my answer to the question on are we likely to have a pullback take place before making any further rise is likely a yes. However, let's talk about the size of that move to really quantify and qualify this. I think that we can see something closer to something between $471 to $473, followed by a pullback, and then another attempt at up. And I think that a rise from the overnight session pre-market is probably going to meet us tomorrow morning with a negative divergence, probably in this area, as you can see me tracing, and closer to that target 2 on the 4 hour chart, and then looking for a pullback to start, and would be welcomed at that time to get back in again. Now, I was able to do some day trading today, which is really all about the shorter term time frames here. You can see a 1 minute chart at the hard right edge of the screen and a 5 minute over here. I'm going to focus you in on the 5 minute chart and what happened as we got the insights from the Federal Reserve. So what you should be able to see over here is as we were moving into 2 p.m., the power of the tools that we were learning about today, and the tools are built by 32-time real money on-site international domestic trading champion, Rob Hoffman. And big shout out to Rob. Hope he's feeling better. What we can see over here is a TRP buy signal, okay, that came with price under the channel, but the fast speed line above the slow. And we did get within a 1 to 5 bar radius, a blue dot, a positive momentum shift. It came in the lower quadrant of the channel, very respectable. And we knew that there was an event at 2 p.m. Now, the view that I provided to members right before the event in a session that we did to prep was up, then down, and then up again. The down didn't happen when Powell started to speak. It was up, pause, and upper, which is fine. There's the TRP buy signal on the 5 minute chart. We very quickly got through the target 2, and we're in a runaway breakout. and maintain that posture. Let's go pull the chart down over here so you can see where we started to slow down in the rise, but how effective the speed lines, momentum crossover, buy signal, all in together were to keep one in that long side trade. Now that's where I was able to get some of that day trading on the ES going there in front of members live on screen. And it was with a small contract size. You can see that this account is limited to 1 to 2 contracts. So what I was able to help with, I hope, live in front of members is how the live trading works. But the education on what happened over here, it's undeniable from what we saw this morning and literally we're able to do in markets this afternoon. And again, the riding the trade rather than rushing out of it too early was helped by prices closing on each 5-minute bar above the speed lines. I was a little touch and go on this bar, but where did it close? Above. Now, as we move towards the end of the day, we got very frothy, got a negative momentum shift, but the TRP crossover lines had not yet gotten below the top lip of the channel, and an echo bounce came back into play. Now that we are seeing that momentum crossover line continue to come down, any further rise from here is suspicious. It may still see $1.23 higher, but is more likely to be torn back down. Now, the view overall is a pullback in markets would be welcomed after a very frothy upward move that we've seen today. And effectively, Powell has confirmed that no more rate hikes. We're going to start cutting rates. They didn't move all the way over to what the bond market said. But what we did see is a big move down on the dollar again. Now, almost a full % down on the dollar again. So what I'm going to do is kind of give you a view of the flight path that we had given members. Green line was the last leg of it, and we overexceeded it. I want to give you a view very quickly here of what this means for effectively the dollar. And you can see very clearly once I pull up that dollar chart that there is a tectonic shift that happened on November the 14th. And today's move is even bigger in the candle print. So this is a significant signal on a flight path we've been holding on to. Okay, it's taken a little time, but we're now back on track to it. And what did that allow me to do? And that was the insight that we utilized using the TRB toolkit and more, that we're likely going to see the dollar back down. That dollar move back down allowed me to get into and start nibbling on a intra-week swing on silver. Now, I used a product called HZU, and I'm going to show you what I was able to do with that and on the accumulation. And admittedly, I did start to leg in a little earlier, had to suffer with a little bit red, but did get a full reversal back up and then some. Now, let me share, the outlook here is likely more positivity, but unlikely going to have a big move like that tomorrow. Some modest continuation into the $22 area. And then I think that we have to relax before a potential continuation. So the market into the end of the day today did what we thought it would do, what our tools told us. But as we were coming into this week, the insight that I was able to provide members was, hey, I think that we're going to see a dollar down. I may have to go flat before the Fed, but depending on positioning, I'd like to hold it and or build the trade. Now, I used a product called HZU. It's like SLV times 2. And acquired it in a couple of tranches, as you can see, and sold it in one tranche and was able to gross just under $2,100. Again, past performance is not an indication of track record or future. Consult your financial advisor before making any trading decisions. But oh my goodness, the power of the toolkit was top this morning and literally put right back into market, right in front of members again on the day. And that's the power of award-winning, competition-tested, competition-winning tools by the man himself. I don't think we know of anyone else that's had 32 trading competition wins like Rob has. So right here, right now, as you can see, we've got a very bullish posture overall, but we've got an extension here on that 1 hour chart in this runaway breakout. It is not signaled off, but I'm going to be watching that very carefully between now and, of course, tomorrow morning. And what am I going to be looking for? I'm going to do it obviously using the futures overnight. I'm going to be looking for a sign that says this runaway is at its end. Now, we're still seeing the runaway in place. When the TRP momentum crossover lines suffer another red dot, and the lines themselves come down back into the channel, we will be at a spot likely and have an advanced warning of a pullback in the market. The question then is it a pullback to bounce back up, or is it a more pernicious pullback? And more on that in videos just like these as we move through the week. My view again is the market is very stretched, but a market that can have one of two types of pullbacks, a minor one and then continue to a higher high, even though the market's stretched, or a more significant pullback and set up for a more durable rise into the end of the year. Keep yourself on a level playing field. The highest probabilities for the market were provided to members in advance using tools just like these. Provided the risk tolerance is available, there is potential reward, but not guaranteed. And we have to go in with our eyes wide open, folks. That's just a bell curve tilted 90 degrees on its left. The center of the bell is the volume weighted average price for the SPY month to date. We are not one standard deviation, not 1.5, not even 2 standard deviations. We're about 2.25 standard deviations above the VWAP. This is a ripe area for the completion of this move, meaning a higher high is possible. It's less probable that it holds. A refueling pullback becomes the higher probability. Up to 473, back down into the mid 460s or mid to upper 460s would be the logical look right now. And that means profit taking for me, which I did on that silver position, and getting ready for another round again. A very, very warm season greetings to you, yours, and wishing you a wonderful rest of your day. Thank you to all that joined and were part of the session this morning. Looking forward to more like that with you. Welcome to all of our new student family. I hope that this video added a little bit more of a completion to all of the education from this morning. We were able to utilize the tools to capitalize on up, and we're able to do that multiple times, both on a day and a swing basis, as you can tell. Have yourself a wonderful rest of the day. Thank you for watching. A big shout out from Rob to everyone, and very warm season greetings to you and yours. Bye for now.